All right, so we're going to get started. We're going to start reviewing some of the stuff that basically we're going over premium charts. So what are premium charts? I'm going to put it in a basically just a message tab here, just so like as we go through it, I'm going to type stuff up so you can screenshot it, have it for later reference. But we're just going to dive into it. So basically, what are premium charts? Premium charts are your options contract. So everyone buys and sells option contracts. People buy and sell options contracts. That's how we make money, right? You buy a contract, you sell it for hopefully more, or you sell it for a loss. We're looking to make money on those contracts. We want to see the premium of those contracts go up. So basically, premium charting premium contracts, charting the contract you are buying. Okay, so how does this work? So first thing, obviously, we want to do is we want to buy the contract. We got to figure out which contract looks the best. If you guys are new here or you weren't at the webinar when I went over how to pick options contracts, I have a full video on how to pick options contracts. It's pretty simple. You just want to look for good open interest, good volume. If you're trading SPY, SPX, QQQ, Apple, things like that, it doesn't really matter. There's not too much that goes into it. It's pretty simple. So if you went through this webinar that we're going over right now, and then went back to that options contract video that I have posted in the webinar recordings tab, you'll be completely fine. This is like, if I mainly trade SPY and SPX, QQQ. I mainly trade those things, and I pretty much only trade those things. So it makes it very simple to just use those. What is considered good volume? Rule of thumb, I like to see over 1,000 volume, and that's mainly for day trading. Like if you're trading options contracts that come in, volume is more pertained to day traders, scalpers, especially scalpers. I don't scalp, but that's important to know. And then open interest is very important to swing traders, and just mostly swing traders. It's just basically saying how many open interest is how many contracts are open. Like people are actively hold a position in that contract at the start of that day. It doesn't update in real time. Like for example, you know how volume updates for a contract or for like a stock, like each candle has volume and it changes in real time. Same idea for an options contract. So volume is kind of more important. I pay attention to that more because I mainly day trade. But yeah, so I look for 1,000 open interest, 1,000 volume on the day. That's what I'm kind of looking for. Obviously, it's going to be light at the beginning of the day, but if you're mainly trading SPY, which I recommend you learn to trade first, that's what I would be looking for. Let me know if that answers your question. But okay, so premium contracts. Charting premium contracts are basically charting the contract that you buy. First thing you got to see is you got to find a setup. So basically, in the stock specifically, you're not going to just be looking at options contracts. Sure, you could do this. There's people that do this, but I personally have always learned and have been taught and have always traded the same way. Find a setup in the stock. You want, so like you're looking at Apple, you're looking at SPY, you're looking at Microsoft, whatever. You want to find a setup that looks good in the stock. And you guys all know, people that have been here for a while, break and retest is my thing. So personally, I'm looking for a break and retest. And then from there, you find a setup. Then you're going to go to the options contract. You want to find good open interest and volume. So, and I'm going to put here just for reference, day trading, open interest, kind of both, but mainly swing trading. Okay, so from there, what we're going to be looking for is from there, 3, what we're going to be looking for. So you found a setup in the stock that you like. You decide you want to trade it, right? You go to the options chain. You're looking for a good contract to buy. You pick your expiration date, and you look at the volume, open interest, and also you want to be paying attention to delta. So I'll put that in as well. Delta, that's how much money you make per dollar the stock moves. So Apple moves $1, the delta is 0.50. You're going to make $50 on every dollar that it moves. Simple enough. Okay. So I don't want to spend a lot of time on options contracts. Don't make them more confusing than they are. You want to pick options contracts that are close to in the money or at the money. You want to pick it close to where the stock price is already at. That's just a good rule of thumb. That's how you want to do it. And pick whole numbers. That's an easy way to think about it. Okay. So after that, what you're going to do is you're going to go and you're going to look at the premium chart. And you're going to find entries, stop loss, and profit targets. Okay. And I'm going to show you how to do this, but I use it on Thinkorswim. I know you can do it on Webull. I've heard that you can't chart it on Webull, which is essential to really using this. But you need to be able to chart it. If you don't have a Thinkorswim account, it takes literally 5 minutes to go set it up, and you don't have to put money in there. You can just literally have the account set up to just chart. So that's something that you want to do. Just go and set up a Thinkorswim if you really need to. So this is the whole step list, right? This is all you got to do. You got to find the setup, go to the options contract that has good stuff working in your favor, and then you're going to go to the premium chart, and you're going to just go over it. Basically, you're going to find support, resistance. You're going to chart it like a regular chart, and I'm going to put that here. Chart like a regular chart. And this does seem self-explanatory, but some people get this confused for whatever reason. If you buy a contract, you got to know that you want it to go up. When you buy an options contract, you don't want the premium to go down. That means you're losing money. You want it to go up. So just keep that in mind. So you always want, I'll put this in all caps, always want your options contract chart to be bullish. Put a lot of emphasis on that. Okay. So what that means is you always want it to go up. So obviously you want the chart to be bullish. So you always want to buy options contracts at support and sell at resistance. You want to buy them based on with a bullish bias on the options contract. So you're looking at puts, you think the market's going to go down. It does not matter. You want the options contract to be bullish. You want it to go up. And we're going to go over an example of that right now. But if you want to take a screenshot of this, this is what you're looking for. I can make it super big, so it makes it, that's a little too big. This is what you're looking for. So we'll come back to this, and if you guys need a screenshot of it, let me know in the chat. Like I said, if you guys have questions, message me in the chat and we can go over it. Okay, so we're going to go over an example right now. So we're going to look at Apple. So basically, we're looking for a setup. So I trade break and retest. So obviously, I'm going to show you a break and retest and what I would be trading. Okay, so first, obviously, you want to find the support and resistance of the stock. And so, like, for example, we're going to go in, look for certain support and resistance areas. And how we're going to do this is based on what we see on the chart. Like we've always been taught, support and resistance is king. That's how you're going to trade it. Okay, so this is the reason why I draw this zone, because we have a rejection here, a rejection here, a rejection here, rejection or a bounce here, and a bounce here. So 1, 2, 3, 4, 5 points where Apple reacted to this and moved in a different direction as a result of reaching this area. Let me know if that doesn't make sense, but I got videos on that as well in the webinar recordings. So we're not going to spend too much time on that. So we've have all these rejections, bounces at this area. So obviously this is a point of significance when it comes to Apple. So now what we're going to do is we're going to go look at, okay, so when I trade a break and retest, I'm looking for a break to this level, which we had right here. There was a break, and then there was a retest. And let me know if you don't see the retest, and we can go over that. But basically what you're looking for is, okay, we had this break. We had the retest here. This is where price came up, broke a floor, and came and retested it as a ceiling. Broke support, retested as resistance, and rejected it. That's what we're looking for. Okay, so this would be a common entry point of a trade that I would take. Okay, so let's go look at an options contract that will give you a good indication of how this is going to work. Okay, so we're going to go to Apple, and keep in mind how I'm doing this, because this is going to give you kind of a walkthrough also to how to get these premium contracts up onto your chart so you can chart it. So let's clear this off. We're not doing it. I'm just going to chart the premium chart. So we go here. We look for an options contract. I don't trade 0 days to expiration. It's risky, and I don't like to gamble with my money in the market. I like to make money in the market, so I don't gamble it. I don't play 0 days to expiration unless I feel really good about a play. So I'm going to be looking for, so like this play happened on Friday. This situation happened on Friday, September 30th. So I'm going to be looking for, which is a Friday, 0 days till expiration. So what I'm going to do is I'm going to go look at the next week. So that would be this upcoming Friday on the 7th. Okay, so we're looking for an options contract. We've got all these strike prices. I like whole numbers when I pick a contract. So what I'm going to do is I'm going to pick a contract that has good, that's a whole number. And just take note, look at all these contracts, right? Look at the open interest of all these contracts. Which ones have the best ones? These round numbers, 150, 140, and then increments of 5 is how I like to live. So like if I'm trading SPY, I'm looking at 395, 380, 385, 375, 405, things like that. So increments of 5. So like even this 145 contract would be good. That's how I like to pick my contracts. And that's how I almost always pick is the only way I pick my contracts. So as we can see at this moment in time, we were slightly out of the money. We were right near 140. So what I'm going to pick up is a 140 contract. Oh, so we go over to here. I don't know what that is. We go over here. I'm going to be looking at my contract. Move that over a little bit. I pick my options contract. And what I do is I'm looking at the options chain, right? I go to copy. So I'm copying this option, and I'm going to go back to my charts. I'm going to go to this ticker symbol here, and I'm just simply going to paste it. Boom, brings up my options contract. So this gives you an idea of how the options contract moves. How do I personally chart this? Like I do on my regular charts. I chart off the hourly time frame. The hourly, I like the 4 hour, and that's really how I chart my stuff. Okay, so we go and look at this. Let's see if we can find good support and resistance areas, right? So right here, we got 2 touches, boom, boom, at this 183 level. I wouldn't call this a level necessarily. So we're looking here, see if we can find any levels. We could call this a level right here. Touch here, rejection there, and rejection here. So we've got a couple levels so like basically how I'm thinking when I do this is like, okay, we broke this area. Now I'm going to wait for the retest. And then when it gets the retest, I'm going to take my entry. So like when we break this area, I'm already going and looking for my options contract, and I'm charting it out. So I'm ready to pull the trigger, and I know where my support and resistance is. So wherever this contract happens to be, I know exactly where I'm getting in and where my stop's going to be. And those things are already going to be set in stone by the time these contracts come up. So we have this break. I'm waiting on the retest. So I go and fill my time with finding a options contract that I like. Okay, so we're looking at the 4 hour right now. As you can see, there's not a ton of data, so we'll have to drill down a little bit. So we're looking for support and resistance, right? You can see this was kind of a peak here. So we might as well plot an area there because that's some sort of area of significance. We move up. This is another area of significance. Just remember this whole section right here has not happened. So we had the break right here, right at this green candle where it peaked out. So right here, from here over has not happened yet. Everything in this box right here has not happened. Okay, so I've got my support and resistance, right? And so what I'm going to do now is when I'm waiting for my retest, waiting for my entry to come to me, I'm going to come to my options contract. I've got it all charted out. I'm going to remove this just to keep it simple. And so I'm going to go here. I'm going to zoom in. I'm going to look at, okay, what am I looking at in terms of getting into my trade? So now I'm looking at basically just like a regular chart. So if you remove, I'll remove this to make it a little simpler. We did break this level here, but what we need to pay attention to is, okay, where do we take our entry? So our entry would have been right around here on the retest, right? The retest, and you can look, it looks pretty similar. That candle will look relatively similar to the retest candle that happened there. So see how it has a rejection there, similar rejection, same type of candle. Okay, so now let's say I take my entry, we go to the 15-minute, we get the rejection that we want right here, right here, right here. We could have taken an entry on any of these candles. We go to the 15-minute. These candles all look pretty similar. Let me know if you guys aren't following this, but it's basically the same idea. It's just the opposite because we're playing puts, right? So it's the same idea. This candle here correlates with this candle here. And then we have the push up right here. And then see this candle right here? That's this candle. So this is where we can get an idea of where our entry is. So now we've already basically plotted our support and resistance. And so now we're looking at, okay, let's say we take our entry where we have this clean rejection down. And look at the volume, how it correlates. See how this had higher volume than the previous candles here? This candle and this candle? All these candles had lower volume, and then this candle has higher volume. That gives us an idea. Okay, this is probably a rejection. We've already got a bear flag working in our favor when we're looking at this trade, right? And it might be coming at you fast if you're new, but this is, you'll learn it. It comes with time. But you see we broke this level, coming back to retest it in a bear flag. Almost, this is like a perfect trade. Okay, so now we have this coming up. You could be patient. If we go through and look at each of these candles, look at where volume tends to happen to have a pop on the actual rejection. I can zoom in and make it even more clear. The rejection happened when we had higher volume. See this this candle was higher volume. Sure, we had a high volume candle here, but this candle isn't bearish. We want to see something. This is bearish, right? This looks bearish. These candles look bearish. This one and this one. This one does not. Had high volume, but it doesn't look bearish. So if anything, we'd be looking at this candle and think, okay, this is kind of bullish. But no, we got to wait for our entry, And then when we have a high volume candle where volume starts to come in and we say, okay, this looks like a rejection, that's where we take our entry. So now we see a high volume candle with a good rejection on here on the retest. And this would be that candle right there. This is the candle that we're looking at on the options contract that we're also looking at on the options contract. And then we're looking at it, the same candle on the actual chart. Let me know if this isn't making sense. But I'm just going to keep going. So rejection. We have a bullish looking candle here, right? So now this is how simple it is, right? Notice how when you look at this candle or this setup here, we have a bear flag here, but look at what we have here on this contract, right? A falling wedge. You don't even need to do this. This doesn't matter, but this will add to your confluence as to why you should get into this trade. If you have the setup, take the trade, you know, like if it looks good, just take the trade. So this is the beauty of an options contract, right? We see basically our setup happening. We see the rejection on good volume, and then we go here and look where we're at. Look where our support is. Okay, so let's say we got in on the close of this candle, right? We got in at 206. Our stop would be below 183. So maybe 179, 178, 175, whatever you're feeling like, whatever feels right to you, but give it a few cents. Don't put your stop at 182. That wouldn't make sense. Doesn't give the trade enough room to breathe. You got to give it a little room to breathe, maybe to come retest this level and just bounce off it a little bit, but you got to give it room to breathe. So I would probably put mine around 176, something like that. Okay, so you're basically risking $30 on this contract. So what is $30 on this contract? That's about 15%. Okay. So now when you look at this from a risk to reward perspective, this is I'm going to edit this. I'm going to change the color. So you know this is where our entry was. Okay. So we got in on this purple candle, right? Now our risk, let's call it 176 where we got in, right? Or that's where our stop is. So this is your risk. This is the potential you could lose. $30 on this contract. Now, where's the potential of reward? Our next resistance. That's where we're going to look to take profit, the next resistance. So we go here. We draw our little risk to reward box to make yourself feel good. And we can see how much money are we about to make on this contract. We go here, make this green, make it look pretty, right? Okay, so now this is what we're looking at. So you're looking at and you can draw this. This will give you even a better visual, right? We go here. Our stop is right here. You're looking at a 14.84 loss, losing 15% to potentially make this profit target here 70%. So what is that in risk reward? I got my calculator right here. We'll work it right here. This is literally what I do when I go and look at my trades. Okay, so I'm risking 15% to make 68%. So 68 divided by 15, the risk to reward is 4.5. So I'm risking 1 to make 4.5 or almost make 5. That's how I'm thinking about this trade. Now, this is my first profit target, right? I'm probably going to take off 80% at my first target. And this is a 70% gain on a contract. I know you all would love a 70% gain on a contract within the same day. It's great return. And this is next week's expiration. So this is a great looking trade. Okay. So that's how you want to think about putting these trades together is, okay, this is where I took my entry. This is my risk. This gives me my risk of where I'm going to stop out. And then it gives me where I'm going to take profit. So here's my risk of what it could come down to. I give a little room below the support. And then I have my profit target based on the support and resistance of the contracts. So you're risking a 15% loss versus a 70% gain. I think that's a wonderful risk to reward, right? That's what we want to look for. That's what we're looking for in these trades. Okay, so we can go over another example. If you guys have questions, please let me know. I feel like this is kind of self-explanatory, but obviously it can be a little confusing, right? Okay, so let's go look at this. Here's a trade that I took on Friday. So we have this level here. We were in a ton of chop this whole week, right? Okay. So now we're looking here. We have a rejection or bounce, bounce, rejection, broke through and had a massive run after that. Okay. We had a break, rejection, rejection, broke through, ran a little bit, failed, broke it, rejected, and came down. Okay. So this is what I was looking at on Friday, and this is what I ended up taking. So what you're looking for is this rejection here, right here. We had solid volume, not greater than the others, because you got to do it in relative to what happened at the open, or like this was the opening candle, which only equates to 30 minutes of the full hour of market being open. This is a full market or full hour of the market being open. And then this one is that hour after this candle. So it's basically just the market as the day goes on loses volume and then continues up. You can see that trend all throughout the days, every day, pretty much. Okay, so we had this rejection candle here. It's an hourly candle. It holds more weight. Okay, so now with the same thesis, I'm not going to go deep into setups and stuff like that because we've gone over that in tons of videos, right? So what we're looking for is we had a break, come up, had this rejection, and then the move down. So what we're looking for is an entry on this candle here. So this is a trade that I took on Friday, right? Here, we had a rejection. Let's go to the actual charts. So this is ES. It's the same as SPY, S&P 500. It's just the futures. That's how I like to trade SPY. I chart it on the futures. Okay, so we go to SPY. Now let's look at tomorrow's. I don't trade 0 days to expiration. So what am I going to do? I'm going to go look at the next following expiration, which would be tomorrow. Okay, so we go here. We go look at SPY. We find a similar area of where this was rejected. This was the same candle. It looks a little different because of just because it looks a little different when it looks at SPY and versus the futures. We go here. Price was somewhere around 360, right? So the contract that I took was 360. We copy it, paste it. We go to the chart. We clear it off. We go to the hourly. We look at support and resistance. This support and resistance is pretty clear. See this level right here? Rejection, rejection, bounce, bounce. So this is a pretty significant level on this chart, right? Okay. So then when we go to look at levels as in terms of taking profit, we see probably we would, let's go to the hourly. It might be a little cleaner. Go here. We'll start from the top. Looking for certain levels. We'll go with this one here. That's a good target because that's where it popped up and ultimately dropped off. We see a few rejections up here. So this would be like a final profit target, right? Moving down. We go to the 4 hour, see if we can find something a little better right here. See this here, see this here. It might look, it'll take a little minute to get adjusted to what you're looking at, but you got to keep the same concept, right? We see this level here. We see a bounce level here, right here. See this hammer, rejection, rejection. And you'll have to look for profit or entries and stop losses based on where the contract is at when you basically get in. Are you trading options? EE, I don't normally call out, like I'll basically walk you through the trades that I'm getting into. But I don't really do call outs. I'm considering doing a page where it's just paid, where people can pay for my alerts, but I'm really in the business to teach people how to trade. I'm not really interested in just giving handouts. I'd rather, instead of giving you a fish, I'd rather teach you how to fish and you live off this the rest of your life, right? So I'm not necessarily interested in that, but I'm considering creating something for you guys to just follow my trades along and getting the entry stuff. So I'm mainly trying to teach you guys how to fish, right? Are you trading options over the weekend? No, because the market's not open, so I'm not trading options. Okay, so basically what you're looking for here, right? We got these support and resistance levels. And now, so we're looking for an entry. See this candle here? This is where the entry was, because this is where that rejection happened. We go here, ES, candle looks the exact same, right? We had this rejection, we had the break, rejection, boom, we have an entry. Okay, so take a wild guess where my stop's going to be below. Right below this 188. Now you can see we barely closed over this, so it's a little tight, right? So we got to give it a little room to breathe. So even so, if I got in here, and I'll make it purple. Oh, I'll make it purple so you guys understand. That's where we get in, right? Okay, so, and then I got in at 198. You really think I'm going to set a stop loss for 188? That's a 5% loss, okay? I got to give it a little bit more room. So I'm going to give it about $30 to let it work itself out, right? The low here was 176. You're setting your stop loss way too tight if you're putting it within $15 on an options contract. I think we all know that. You got to let your contract move a little bit, let it breathe a little bit. We got to give it a little room to activate, especially when the support is so close. Okay, so we get in an entry about 198, around $2. We set a stop loss below here, give it a little room to breathe. We move out a little bit. Even if you wanted to find another significant support to actually have a clean stop loss, like, hey, I want to have an actual level where I set my stop, you could do 159. This is a $40. This is about 20% on your contract, right? Not that big a deal. 20%, that's probably my max stop loss. I'll do on a trade. I'll size smaller if it's bigger than that. But okay, so now we're looking at where are we going to start taking profit. You could put a profit target for 238. That'd be a 20% gain. That's pretty solid. I like to swing harder than that. But this could be a profit target for you if you really wanted it to be. 238, that's a 40, or that's a 20% gain on the contract that you got into, which is pretty solid, right? But I'm looking for a bigger move than that. If I'm seeing a rejection here, I'm looking for an actual move down. Where's the new lows, right? Right around here. This area is new lows, right? So I'm going to look for new lows. If we come up, I'm going to look for this trend to continue and have a move lower. So when I'm looking at this, sure, if you want to be conservative, take a trim here, right? Okay. And then you could have a first initial target. That'd probably be a good idea, is 332. Now this would be over almost a 60% gain on this contract. If you want to do it in actual relative terms, we go here. To get to here, that's a 70% gain on the contract. Do you see, are you guys understanding how big a deal this is? Like you are actually, versus guessing based on the chart of how much money you'll make, this is literally telling you exactly how much money you're going to make and exactly how much money you're going to lose. So your stop loss can be on a dime, perfect. You can have a perfect stop loss just because of this. And I love this because I can make my stop losses like less than 15% almost every time because I do this. And so now I'm looking at a 15% stop loss for a 70% gain on my first profit target. Okay, what if I let it run a little bit? The next target is 112% gain. And this is on a contract that's not 0 days till expiration. This is on a contract that expires today. I could have swung it if I wanted to. And that's the difference. So now I'm seeing, okay, look at this. I have this huge opportunity to make 115% and I'm risking 15%. What is that risk to reward? 115 divided by 15. You're risking 1 to make 7.5, almost 8. So it's in 1 to 8 risk to reward. It doesn't get much better than that. And that's really my last example for tonight. I'm not going to hold you guys forever, but that's really what I wanted to go over. Let me know if you guys have questions. This is literally how I run this whole thing. And I've got these notes here if you want to take a screenshot of it. Find the setup in the stock. I find my setup in the stock, find the options contract, support. I basically find the contract that looks good. And then what was the algorithm? I'm not sure what that means. I'm just looking at the options contract, the chart for the options contract. But so find the setup in the stock, find the right options contract. Premium chart, I look at the chart. Oh, risk to reward. I'm basically looking to make way more I'm looking to make way more than I'm risking. Like here, I'm risking say I put my stop down here, right here, 19%. And then boom, I'm the potential to make 70. So it's 3-1 on the first profit target, and it's 5-1 on the second profit target. Do I have a recording on the support and resistance? Yes, check the webinar recordings tab. I have that posted there. And that's one of the first videos that I made, and we can go over that. So basically, find the setup, pick the options contract, go look at the premium chart, pick your support and resistance on there. That will give you your stop. That will give you your entry. That will give you your profit target. And it'll tell you exactly how much you're going to make versus how much you're risking. And that's literally it. And then obviously you want it to be bullish because you want to make money, right? We're not in this game to lose money. So really, that's all I got for you guys. Thank you all for coming. I think this will really change the game, how you look at trading and how you make your decisions. It did for me, made my stops really tight and my profit targets way bigger. As you can see, I have a profit target in mind for the actual stock, but mainly it's coming from the options contracts because I really care about the money that I'm making, not necessarily where the stock goes, right? So thank you guys for coming. Have a good night. Let's crush the markets tomorrow. Let me know if you guys have questions in the chat. Yeah, have a good night. See you guys.